I'll go to you, Lisa. What's your take on the latest on trade? Is it the key factor you watch as to whether or not we're going to have risk-on or risk-off sentiment in markets?
So we do think trade is a really key factor driving the markets right now. If you look again at the economic outlook, we've got pretty moderate global growth. So really anything that could bring down that growth rate even slightly is a concern. And the other big implication of trade is really just the uncertainty that it's bringing into the overall picture, which is then again bringing down that CapEx spending and causing businesses to delay their spending plans. So we do think it's a big factor. Right now, we don't see it tipping the economy into recession, but we want to continue to monitor it going forward.
Scott, do you think that investors need to settle in for a much longer U.S.-China trade scenario playing out? I mean, I know we're getting these headlines and it's moving things back and forth on a daily, sometimes intraday basis right now, but not that much has changed other than the fact that we do have additional tariffs of 10% on more goods being imported from China coming in right now. I mean, longer term, this seems like it can continue to be painful.
Well, you know, Morgan, we are expecting an eventual deal, but, you know, it's probably not going to be this year. It'll probably be sometime in 2020, and it might not be that great a deal. I don't think the market really needs that great of a deal to respond positively to that. But certainly we're going to react to every headline. Once again, today was a perfect example of that. And some of the things that Karen mentioned, I mean, you know, currency manipulator, you know, retaliation, these various things. This trade friction has been ratcheted up a notch here in the last week or 10 days, and you know, that increases the risk to our outlook, which is really a modest growth, modest inflation, Fed being pretty easy, no recession over the course of the next 12 months, or at least a low probability. So these increased tensions really put negative risks to our outlook. So we're paying very close attention.
Stephanie, the Russell 2000, the small caps again, which tend to be historically more U.S. focused, again underperforming the market. They've been among the worst performing averages, at least here in the U.S. year to date. Is a rally due for this particular part of the market, or no?
I mean, it could, for sure. I mean, everything can bounce, right? But there's a big component in terms of financials in this index, too. So, I mean, you have to see that financials are going to catch a bid, and not with rates at 1.5.